Good morning, good afternoon, and good evening, and the bull mark marches on. And cable going through the 139. 139? 129? 139, I think it is. Yes, 139. It's one of those 30s. Or one of those nines. That's what I'm having an issue with. It is a holiday here, so things are kind of quiet, just kind of drifting up. And there's the cable. Yep, that's it. Is 39. That's what it is. We keep on looking for that range to develop between the 38 and 42, and I guess now it's finally done that. Um, and then the other excitement this morning, or I guess it was last night more than anything else, was the natural gas. It was firming up really well there last night. Let's see what it's doing this morning. Um, this morning it was much higher. Oh, they're not reflecting it. That's interesting. Yeah, they are right there. Okay. So they did lift it up from yesterday's close. That's Friday. And we're seeing that strength in there, but we're not seeing the daily signal still. Boy, they do seem to fight that, don't they? At the same time, natural gas is floating around in the weekly buy. So it's trapped in one of those limbo states where you can't be short. At the same time, it's cruising for days upon days through the daily sell, and at the same time, we're in a weekly buy, so it's a neutral. You can't be long, you can't be short. We do have some traders here that are paying attention to that product, and they're long, looking for the pop, and it goes up. There's no doubt it goes up, but I just can't get a daily buy out of it so far. It's just the math just refuses to turn it into that direction. It's just a matter of time, I imagine. Last night I saw it as high as over $3. So it's going up about 16, 17 cents, which is, I guess that's 17 cents. Yeah, it's a what do they call it? A cubic foot. They measure it in a block. So now let's get Dukascopy rolling along here. I'm not seeing the chat line yet. There it is. And let's go to the chat line and see what's going on there. And so we're seeing some good action this morning. Wonder where the Bitcoin is. Bitcoin must be marching along also at the same time. And we see there's Robin. Hey, Robin, how you doing? And everything seems to be marching along here. Got this. All these products are doing their thing, and you can see this. The market at the same time, the U.S. market is holding sideways firm, up well, the type of thing right there. Let's drift over again to the currencies. Take a look at the Swiss franc. Swiss franc will really reflect the dollar here today. Just sideways action. Trying to perk its head up into a daily buy today, but we got a red and green going there right now. Yesterday, or I guess Friday, had a red and green. And you can see the weekly is trying to curve over at the same time. So we have a very dead day here, a very active day in Europe. I saw the FTSE up like 107. Supposedly they have 20% of their population now inoculated. And that's what's driving that, I guess. That compared to, I thought it was kind of funny. Someone on the television said, yeah, they got 20% of their population inoculated, and Europe is less. How do you describe it? Just a little less. And then he said they only have 4%, a little less. It's like 5 times less. So, but they do that stuff. Well, that's good. You sounded very happy, and you got your RAM into the laptop. That was a pretty good thing. I've never really moved around. I think I've tried that once, doing some repairs on a laptop. I'm so geared towards towers, more finger space. So everything seems so miniaturized on a laptop. It always makes me nervous that I'm going to break a motherboard or something. Whereas a breaking of a motherboard on a tower for some reason seems to be a hell of a lot easier. In other words, not breaking it is the key right there. All right. What else is brewing here? I guess we have PayPal today too, don't we? Have some good things going on for us on a holiday. PayPal has turned into being like the third largest bank in the United States now. It's just like a giant. It's well beyond. It's like 4 times bigger now than Citibank. And now that they're doing the cryptos, that cannot, I'll repeat that, cannot hurt PayPal. What a nice juggernaut of an investment tool. And then we read some really good stuff here. Since it's a holiday to us, we were kind of cruising around here a little bit. But there was a great article. Let's see if we can put this up there. I'm going to move this up onto the screen. This is a really good one. This is a great explanation of what happened to Robinhood, which I tried to explain to my sons like 3 years ago when they started using it. I said, they're just front running. That's all they're doing. So, and since you're buying these things and holding them for 6 months to a year, what's the difference? I mean, they're only making like a half a cent or 2 cents on some of the trades that you do, and that's why they give it to you for free. So it doesn't really matter. This is just another little brokerage house of some sort. Exposing the Robinhood scam. Here's how much Citadel paid Robinhood to buy your orders. And they use something like, I think what it is that they use like 3 different front-running operations. Citadel, they had them listed in here. Good morning to you, Carl. How you making out, trader? Are you trading away?
Oh, I'm sorry. You're on your
I'm
thing.
doing my thing. Have you been trading through tonight?
No.
No?
I just looking everything's dead.
Yeah.
All right, I'll talk to you later.
All right. And so, bye-bye. So, the here's the list of the houses that Robinhood is connected with. They're all high-frequency operations. I thought it was well worth just pointing out. And everybody, like there, the former high-frequency, where is it at? I know it's Citadel to start off with. It's Wolverine. I'm trying to think of the other ones. There's like 3 or 4 high-frequency operations that still survive. What they do is they buy business off of smaller operations. Let's see if I can find them. This way you'll have an idea if you're using Robinhood or anybody else. There it is right there. There it is. I got it. So they, what happens is that Robinhood feeds Citadel, Virtue, 2 Sigma, I remember 2 Sigma, and Wolverine. So, and I've seen, I don't know anybody at Virtue, but I do know people at the other 3. And they're just, high frequency operations. They make money because they buy from the brokers, and then the exchanges pay Citadel and Virtue and 2 Sigma and Wolverine money to put their trades in at their exchange. And so what it is just what is it? A feed, not a feed chain. They have a name for it. It's just a chain of events that occurred during the trading. Like, in other words, you're a Robinhood client and you buy whatever you're buying, and you're going to park it there for 6 months, so it doesn't really matter. Citadel or one of these other 3 buy it from Wolverine. They pay Robinhood a little fee, and then they get a fee from an exchange to do the execution actually at the exchange. So it's like a food chain. That's it, a food chain. And so that's what's going on there. And so that's the whole system there. So this is a really good article. It's Zero Hedge. You can check it out. Exposing the Robinhood scam. Here's how much Citadel paid the Robinhood to buy your orders. It's a good one. It's a good article. It gets a little deep in the weeds, as they would like to say, when you get a little too professional. But overall, that's all they're doing is buying orders, and that's why Robinhood can give free execution and make money at the same time. It's just nothing major. It's just a fact of life. Vladimir, it's the stone cold truth, as Jeffrey Gauntlet suggested last. Okay, so there's more of the article. I hadn't read all the article last night. I just read a lot of it. Just saw the names. High frequency trading. Remember, I had an office at one time in the epicenter of high frequency trading, in the Annex building in New York at the Chrysler building in the Annex, and we were, matter of fact, that first article that came out about high frequency trading came out of our office. So it's just it's illegal. We spotted it. It didn't make sense at the time. Front running is not supposed to happen, but due to the fact what happened in 2008 and the destruction of the free markets totally, that was like it was one thing. The free markets had been slowly beaten up, I want to say. Not currency free markets. I'm talking about the general markets like equities and bonds and so forth have always been front-run on some level or another. And the Securities Exchange Commission held that, barbarian at the gate. But after 2008, when the collapse of the market from Congress's game of collateralized debt obligations, it was the U.S. Congress who was at fault of that, and the number one leader of that was Barney Frank, from Massachusetts. The Democrats thought that it was racism if you didn't lend money blindly to anybody and everybody. I saw him crying on CNBC that day. That was very entertaining, how he thought he had been right. And now that he collapsed the market, he was very sad. Notice that YouTube has taken that particular scene, gone. Can't find it anymore. I bookmarked it. It was very entertaining at the time. And so what you have is from 2008 up to now, you have high-frequency trading and front-running, loud, blind-eyed. As we always talk about it, about what do they call them, dark pools and so forth of trading that goes on that's illegal. But the Securities Exchange Commission and the CFTC turned a blind eye to it so that they can have more volume. Because volume collapsed after 2008 in the marketplace. A lot of people were damaged and hurt. And so that's what goes on there, is that all this high-frequency trading is kind of a joke. They don't make a lot of money. They don't make money at all. They get paid fees by the exchanges. The high-frequency traders get paid fees by the exchanges to bring their orders to be executed on the exchanges. And they're all electronic exchanges now anyway. And so then what happens is that the high-frequency traders buy those orders from brokerage houses so they can step inside the trade within a second. And so what happens is that they're buying and pinging the sizes and doing all these things. It's just a game that goes on. It's all wrong, but no one's going to stop it because the free markets, the relative free markets, free minds, free people have disappeared since 2008. It's a whole different world now. So you have what do they call it? They have, from the collateralized debt obligation disaster, we have now QE. There we go. I knew I was another letter group. Quantitative easing. And that's from the central banks. And that's who takes the currencies and everything else, and they put them in channels, and they claim, oh, this is fair and this is okay. It's okay trading. Currencies are obviously the better of the product. Compared to trading stocks or futures and so forth, the currencies are the best and the freest of the products. As we take a sip of water there, currencies are the most el natural. If you're going to look at the cleanest market of all, it's currencies. And then the bond market is totally manipulated. And then the oil market is semi-controlled by the producers. And then you have gold and silver controlled by the central banks again. Matter of fact, there's a lot of articles running around out there about silver going through the roof again. They think the vigilantes are going to succeed. I doubt it. So anyway, there's a good article. You want to, follow it. It's in, let's see, where's it at? I'm going to put it up there again so you can see it. And then you can go to it again. It's in Zero Hedge, and it's called, and you can Google it, and it'll jump out there. It's called Exposing Robinhood Scam. Here's how much Citadel paid for Robinhood to buy your orders. And then they go in and tell you that there's 3 other high-frequency guys that are also, or organizations, that are paying Robinhood and other brokerage houses. And they're probably paying, I'm not even sure, If it's a brokerage house offering free execution, then they're selling. Let's put it this way. The only way you get free execution from anybody is they're selling your orders. That's the only way they can stay in business. They can't afford to do execution for free, but they can say that they're giving you free orders, and you're doing a market order, and you go and you buy your thing. And as far as you're concerned, you're not paying for it. Are you philosophically paying for it? Yeah, you're paying a little bit higher price, of what you paid for the product. That's all. And I don't even know, do they let you do limit orders? If they let you do limit orders, then you're not paying at all. But if you're doing market orders, yeah, you're paying a little bit more. So it's not the worst thing in the world. It's just part of nature. I guess you could say. Now, if you think you're buying and selling throughout the day free, then it can be a little bit more of a challenge. You're paying a little bit higher the price than you would normally if you went to a broker that you paid commission to, but then you got the commission. Excuse me. So the question is, what did they say? Taking the money from Peter to pay Paul, or you're taking money from one pocket and putting it in another. That's really what's going on in the end result. So, all right. Again, there's the article. If you want to read it, it'll be pretty legit for a while there, and then it rolls over. Then it gets into the weeds and tries to make no sense on you. So, just the name of the game, and that's the way it rolls. All right, now let's take a look at the rhythm as we look at. There's a Swiss. You can see the Swiss is kind of sideways right there, and we'll show you the Chicago algorithm, and then there's right there, and then let's put Swiss up on the Chicago quant. No, I'm sorry. Let's go to J4X for it right there. And we were excited to see the cable jump into the 39 range. We're also excited to see natural gas fly all the way up into the threes. I just keep on waiting for a green dot in a daily buy. That would be very nice. Wonder what it's going to do when that happens. Boy, that could be a real winner chicken dinner. Could be an explosion of explosions. And then you can see here on the Swiss on J4X, it's still moving down. And you can see here we just are flirting with that buy. So this probably by the end of the day will be up near the dotted line, as long as it stays like this. And then another cross current. Remember, it's a holiday. This is the President's Day. So what we've done is instead of celebrating George Washington, we celebrate some of our presidents combined together, like Abraham Lincoln and George Washington. And so they call it President's Day. And the banks are closed and the brokerage houses are closed. Well, they're semi-open for electronic trading, so you have that going on. And there it is. That's the action we're seeing here. So now we jump over to the euro. Let's see what the euro is doing. And there's the euro. It's kind of flirting along with a... Did it go into the sell on Friday? I think it did. Let's see. What's 14? No, it didn't. Just missed it. So we're 5 weeks in a sell on the euro and 5 days in a buy. You can see it's just lifting its head up again. Just a little blip up. And you can see the weekly today now is starting to show some life in it. That's interesting. And which is kind of funny because at the same time, haha, funny. This is trying to get into a weekly buy, and then we go over and we look at the Swiss again. And you can see that is trying to go into a weekly sell, which is saying that it's stronger against the dollar, and then the same thing, they work inversely. So that's kind of neat. So they're both telling us that the dollar is trying to weaken again. That's what they're telling us. And then we go over to cable, and cable is doing it does that thing it does, and that is erase the Brexit. As time goes on, it just keeps on erasing the Brexit. The panic of the 140s all the way down to the 120s, and now we're back up, heading right back to 140 again. Just over half of a decade type of event timeline. And that's kind of the action we're seeing there this morning. So we're doing all right here when it comes to this one. More than any of the others. We keep on seeing this slow, steady burn, and we are what now? I think this is the longest. When we go over to the weekly fact check spreadsheet right here. Are we doing that right? Yeah, there it is right here. You can see that. My mouse doing that? I think yes, you can see that. We have 18 weeks now in a buy when it comes to cable, 16 weeks for Aussie. And then you can see NAS CAD, 16 weeks. And then you can see NAS dollar, 18 weeks. So these things have been riding very firm. And then you can see crude oil is 12 weeks. Now the two grains, which I find very fascinating, the way the grains have been very strong. 26 weeks and 25 weeks. So there's been some, it's half a year now corn has been in a weekly buy. You can't take a short in corn. All you can do is take a profit all the time. Same thing with beans. It's been telling you not to take shorts, but to take just profits because it finds a way to get back into the buy. And that's what they've been doing to all these products there. Let's see. No questions out there. Kind of a quiet day. It's Monday. It's thank goodness it's Monday. TGIM. I'm always happy with TGIF, and I'm always happy with TGIM. And so that's where we are with that. Now let's take a look at Turkish Lira. Turkish Lira's got that's kind of a very short trend now. Turkish Lira. What's that? 8 weeks now, something like that. Let's find it. That's line 17. Yeah, 17. 9 weeks now. 9 weeks in a trend there on the Turkish Lira. And you can see just riding, sell, 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 sell. And there it is from there, from this area here. Interesting. Going from the 8s to the 7s. Woohoo! Broken the 7s, going to the 6s today. So it's been winner, chicken dinner on the short side there when it comes to the Turkish Lira. Where's 44? 44, you here today? Weren't we supposed to discuss, like, how to read the charts? I think that's what it was, right, Robin? 44 was asking about how to read the charts, wanted to know if we were a reporter. Something about politics and markets. If the politicians would stop passing laws, we wouldn't have to have politicians in markets, that's for sure. But they seem to always want to tax you on this, limit you from doing that, executive order here. So politics is always in markets. They were like, how can you put politics into markets? It's like, I don't do it. The politicians do it. Yeah. So all we try to do is dodge their landmines all the time. We want free markets for free people. In other words, politicians, go away. We don't want you telling us what to do to the markets. Let the markets be the markets. Free markets, free people. That's what we used to say on the trading floor. So there's it is with the Turkish Lira. We've gone from the 8 to the 7 handle. Nice. For the people living in Turkey, it's like, yay. And then let's look at CAD. CAD was interesting as CAD went into the weekly sell last week and it's pushing down. It's been in a daily sell for a bunch of days. So we're seeing good action in that, meaning that and then we go over and look at NAS CAD. Chances are, if the both of those are roaring up, we know that the Earl is doing good too. That's usually an energy signal. Let's see what this is doing there. Well, trying to climb up. So that's pretty good. It's in a weekly buy. So the pressure is on the upside on the oils market. So now what we'll do is we'll drift over to the commodities. And there's we did look at the natural gas, right? So let's just give that a refresh. And there's the natural gas, again, not getting into that daily buy, but it's in the weekly buy. So we don't have much of a choice. You can't be short it. And it keeps on going up in value. So that's where we are. That's why we coordinate the weekly with the daily. 44, if you're out there, that's what that's all about. Watching the weekly with the daily. So you want to watch the weekly algorithm with the daily algorithm. Let's save that. El Natural Gas. And so you have here a sell in the daily, but you can't take it because, when you went into the weekly buy here, went into the daily buy there, it's telling you there's strength, and as long as this was over it, you could be long. And you had your nice little wins here. Take your profits, traders. And you had another winner chicken dinner there. But you can't take these shorts because, again, it's in a weekly buy. So, 44, I hope you're out there. Don't be scared. It's okay. We said to you on Friday, for every buyer, there's a seller. And for every buyer, they have an opinion on the buy side. And obviously, every seller has an opinion on the sell side. So you're allowed to have the opposite opinion of the doc or anybody in the marketplace. You're supposed to. That's the way it's supposed to work. I know that for some of those out there who believe there should be only one idea and one reality, and unfortunately that doesn't always work that way. For every buyer, there's a seller. For every seller, there's a buyer. And so you have to have two opinions. So don't be scared. You're allowed to have more than one opinion. As we take a sip of water there in the marketplace. That's the way it's supposed to be. So don't run and hide. You're allowed. All right, let's take a look at crude oil. Woohoo! Through the $60 area. Now that's been in a daily buy from here and a weekly buy for a long while here. So there is another winner chicken dinner. I'll save that one. For every buy, the one I liked, Robin, always was free market, free people. When I was young on the trading floors, that's where the real conservatives and the live free or die type personalities were. And then you had, then you had the retail side. They had to cater to everybody. So they had all kinds of, you had your Jamie Dimons and so forth, type of guys, to take both sides of the marketplace, which is okay. You need a brokerage house to bring orders to a trading floor. And so we don't look down on any of them any more or less than any other. They're all equally dealing with the things that they deal with, their side of the job. Just as much as I beat up on a Bloomberg being the soft dollar king, and probably most of you go like, what's a soft dollar? It's where brokerage houses pay you money through your clients. So in other words, a brokerage house takes money from their clients doing execution and pays Bloomberg for their terminals. And so the brokerage house is not paying for the terminals, but the clients are paying for it, but they don't know it. And they do that in what they refer to as soft dollars. Soft dollars is a multi-billion-dollar industry. And what they do is it's just like high-frequency trading is a soft dollar game. That's what that really is. We refer to it as soft dollars, where a third party is paying for something and the client doesn't realize that they're paying for something. There we go, middle age. Doc, curious about the weekly quant in silver. I know. Let's go take a look at it. It's in a weekly sell with the daily sell. Definitely. That has, and Robin every day says to me, "This thing looks like it wants to take off," and I go, "I know. When is it gonna? When are we gonna get a buy? That's all we're asking for is a buy. A buy in something, and we're not. We don't get either. Here, let me just do this. I'm gonna save this bean thing. Oh, let's refresh it too. I just wanted to save beans there for the energy sector that we go through. And you can see here, beans daily sell, weekly buy. That same situation as silver. Now, silver's sell, I think. Here, let's go over to silver. Let me just save this. There we go. Now let's go to Silverado. There they are. Silverado. Right there, yeah. So we've been in a sell since here. Oh, yeah, look at it. It's trying to get into the buy today. We're getting a volatility signal. But we're in a weekly sell. So, I mean, you could be... Here's the original sell there. That was the first winner chicken dinner. And then it told you to get out here. Now it goes into a sell here. It lasts for about a day and a half, 2 days. It's very no real winner chicken dinner there. Just a teeny weeny little bite. And now it's trying to get into the buy there. And going to throw us right into the neutral. And a green-red dot put us into a neutral anyway. So there's the answer to that one. Does that make sense to you, middle age? I know that there's headlines everywhere today. I'm seeing it. And we saw it yesterday, too. Watch out, silver going through the roof type of thing, Everybody's screaming it. And you can see the action right there. It's trying to... I guess what we will have here is we will be putting on our charts going out to people will be the green line there because this is through. And you got the red and green dot thing going there. But you're not going to get into a weekly buy yet. That's for sure. We'll see what they do tomorrow. And that is the Silverado. And Robin's work is screaming like, it wants to take off. It wants to take off. And, it's just like, he has these old floor tricks that he follows. And every time it comes, it matches up with our work and, it takes off. And matter of fact, I think we had done, wasn't it right, Robin? We were in the 113s or 111s or 114s and your proprietary math was just kicking out on the buy side. And we went into a weekly and daily buy and Robin and I went nuts on bar charts and what's the other one? Future Source or whatever. And we were like, oh my God, this thing's going to the moon, And sure enough, it went up to, 5-year highs, 7-year highs, something like that. Ran up to 2010 highs. Went up to $30 an ounce. Or did it go to 50? Did it go back to 50 again? I don't remember. Let's go to J4X. J4X is better looking at that stuff. There's the silver. Let's make it a weekly. And the product, I remember, it was March. It was back in March. So we'll go like that with the weekly. So did it go to the 30 or did it go to the 50 again? And gold made all-time highs too. Yeah, so what it did is it went up into the 30s. So it was like a 5-year high, something like that. See that? There's the 50 thing. Let's see. Let's make it a. Why is it? Let's do this. Let's do a monthly. So there's the 50 thing back in. Let's widen that out a little bit. Back in the saddle again. 2011. I knew it was at the end of 2010. Okay, so what we did is we went up and challenged 2013 area. Yeah, 2013 area. Right there. 2012. Something like that. So this was in 20. So it was 8-year highs. That's what it is. We made 8-year highs in silver. And it sure does look like it has a lot of life into it, too, when you look at the J4X. It says, yes, no. I missed the first one. Yeah, going to wait for the weekly quant. I agree with you. Yes, no. Sounds like what a prom queen would say. Yes, no, no, yes. Okay, say. All right. Smack me for being a little vulgar there. All right, anyway. What do we got here? We're just going to call you Pinter. Hey, Pinter. How you doing? What is the blue-yellow indicator? The blue-yellow indicator. Let's see. Blue-yellow indicator. On J4X? Is that blue-yellow? Blue-yellow. I see the blue line. I forget what the blue line is. I don't think I put that in there. The blue line is just like a moving average. I'm not sure why it's in there, but that's okay. We're paying attention to the Hinky-Ashki. These are Hinky-Ashki bars? Yeah, here we go. So here we go. Let's show you that. Let's show you the whole makeup of this thing. Edit indicator. So what we're really looking at overall is Hinky-Ashki bars. Cancel. Let's try that again. So right there, that's what they okay, you can see it there. See, it says Hinky-Ashki in the box at the top above time. That's what they are. And they emulate our dots. They're about 68% of the time connected. Something like that. 71% sometimes. About 2/3 of the time they follow the same rhythm. They're a lagging indicator to our dots, but it's better than having nothing. So when you're not seeing docs work, you can see the Hinky-Ashki and get a flavor for it. Now, the golden dots here, that line is see that says a stochastics 5 S slow D percentage D. See that right there? The white one is the fast D, and then the purple dashed is the CCI. That's what that is. Thank you for asking. Sometimes we just keep on talking. Doc goes into Doc land, Doc world. I'm kind of like that snow globe where the autistic child is looking at the snow globe and sees a whole world and a story. And Doc can get that way. Doc can get very narrow in view. And you need to reel me in. And sometimes just by asking a question brings me back to home again. And so that's where we are with that. And then what we have is the Chicago Quants on top. That's this one here. And what we're trying to do is we try to create a public indicating system that matches somewhat up to, well, as best as it can to this. So we've tried all kinds of things like MACD and moving averages and Tom DeMark. We try anything that gets close enough to match up. These three right here are about the closest right here. And the fourth is the Hinky-Ashki. No problem. Remember, for every buyer there's a seller. For every seller there's a buyer. There's more than two opinions to a trade. That's the way life is. And we are not offended when someone says, "Doc, you're crazy. It doesn't make any sense." I'll say, "Okay, it may not." Let's take a look at it and see if I'm wrong. Because I can be wrong. I'm wrong 8.5 out of 10 times. No. I am right 8.5 out of 10 times. So I can be wrong 1.5 out of 10 times. That is my historic average, and it's been playing that way for 37 million years. And that's what it is. We've back tested our work 37 million years at the physics labs in Princeton and the astronomy pane and so forth, and we've done all that. We do our work, used Lisa Randall's work, not my work. We used other people's work and put my math to it. So Doc has a track record of 37 million years of accuracy, 8.5 out of 10, be it expanding galaxies and thermodynamics or price action. We've gone back as far as 90 years when it comes to the Dow Jones Industrial Average. And you see here we have a fact check spreadsheet right there that follows the YouTube action of our work right there. So we're always documenting and recording the history of our accuracy. It comes out to be 8.5 out of 10. So Doc can be wrong 1.5 out of 10 times. 1 out of 10 basically on average. A little bit better than that, actually. A little worse than that, I mean. 1.5. So that's where we are. All right. Let's see. What are we looking at now? So did we do the energies? I think we did. So let's save the Silverado. Let's do the silver contracts. There we are. And then let's take a look at gold. Also, our elbow is really, really sore today. Robin, you check out the spread. You see the platinum gold spread. Let's put gold up on the J4X so we can do that really easy. We're going to go with gold. We'll go with a daily. And there's gold. Trading at, as you can see, the spot is 1822. And you can see the futures contract in April is 1822. So there's it's at parity. Spot and futures are trading at parity. New York and London are at parity. And so you can see here, in a weekly sell for a while now, and it's been kind of going sideways down, I guess you could say. We're on the winner side of it more than the loser, that's for sure. And the sells have been win-win chicken dinners and so forth. And so let's save that. Now, one of the other things that Robin and I have been beating the world with, saying, you got to look at this. You got to see this. It's the Yellen spread. We declared it. We declared the Yellen spread when it was trading at $1,000. And this morning it's trading at $520. And that is, you sell gold short and you buy Mr. and Mrs. Platinum long. Where is it? Platinum. There's the April Platinum. And so look at that. Winner, winner, chicken dinner. So we can do there we go. There's a refresh. And let's save that. And what we have there now is we started telling everybody at $1,000 you got to do that spread because Mrs. Yellen is in. And then I had that crazy idea about Blinder possibly becoming the Fed chair behind that. So combine the two together, you're going to have a platinum gold spread that's going to go back to Shakespearean times, back when they both used to trade at one discounted to the other in reverse. And so that's where we are there with the platinum. Platinum is trading today at 1305, and as you can see on J4X, the gold is trading at 1820. We can round that out to 22 if you want. 21 and change. Nice tight market there, Dukascopy. Nice, huh? You guys must be really liquid in that product, huh? The arb between London and New York is something right now. It's flat. All right, so you got this at 1303. You subtract 1303, right? Let's see if we do this right. Where's Mr. and Mrs. Mouse? So you subtract 1303 there, right, where my mousey is, and then you subtract it from here. So 1303 from there goes to 518 now. So the spread is at 518. What's that? Not yet. Which one's not yet? Oh, yes, right. You were gonna go back to bar charts and mention that again today, right? Oh no, wait a minute. You did the copper. You did the copper story, right, on Friday? Right. You did the copper story. Robin was, let's go to copper. Robin was saying, all those armatures need copper. I was thinking they were going to knock down buildings in China again. Build them and knock them down. Now that JoJo is president of the Congress in the United States at this point, we have you got to figure that the Chinese are figuring that they're going to be able to build buildings. They build these skyscrapers to create jobs. It's like the old Roosevelt concept. You dig a hole in the ground, you pay somebody to dig a hole in the ground, and then you pay them a couple of weeks later to go put the dirt back into that hole in the ground, and don't do anything with the hole. It was just some type of jobs program. And the Chinese do the same thing. They build skyscrapers, and then they knock them down after 4 or 5 years. They don't do anything with the skyscrapers. They don't put people in them, I don't think they do. They just sit empty a lot of times. And then they knock them down again. And so Robin was saying, that here you go, middle age too. We had the same battle going on for a while, in and out, in and out. But we're in a weekly buy here, so there was the winner chicken dinner. Then we go into the sell, but you can't take the sell because it's in a weekly buy, of course. And then, and now you go into the buy on Friday, and then it's winner chicken dinner on Monday. And so you got that going on there. And Robin was saying, all the armatures, in other words, all those electric cars is driving the copper market more than anything else. I was thinking it might be the build a building and then knock the building down. But you know what? The armature thing makes more sense. Robin hit that one right on the head. So, in this right around, where did Mrs. Pelosi buy? Was it Mrs. Pelosi bought $1.2 million worth of Tesla stock, right? And then the next day, Joe Biden, JoJo, I like to call him JoJo, because that's JoJo. And so JoJo, he goes and signs an executive order about buying electric vehicles. So she front-run. She's illegally allowed to front-run stories, so that's okay. So it's not illegal. It's the Congress has passed those laws that people in Congress can buy ahead of the news. So just because they know the news, they're allowed to buy the news, buy before the news, so they can sell out. So that's legal in Washington D.C. For Congress and Senate. And so, Mrs. Pelosi bought electric car stocks as soon as JoJo signed an executive order the next day saying you're allowed to do that. The government's going to force people to do that. So that was something like that. So Robin put the two together and said, the reason copper is so strong is not because like an industrial thing, like they're building houses and buildings, but because they're buying copper. You can't have an electric device without copper. You need the copper to create the electromagnetic field, Maxwellian mathematics, all that other stuff. So that is what's going on with copper. Copper is a electric car play. That's what that is. It's the electric car play. And I think we did that. We did, yeah? Didn't we? Didn't we put that on Friday? Yeah, you did that. Not yet? I could have sworn you did. You had me read it. So I'm sure you did it. So that's where we are with that. Copper's rising because it's an electric car play. You want to have armatures to have electric motors, you got to have copper. It's kind of like an oil thing, So that is what's going on there. Is that clean energy? Is copper clean energy? There is no such thing as clean energy, but the globally people, I think that's a good way of describing them. The globally people who believe in all those clean things, there's no clean energy. Newton doesn't know clean energy. Einstein doesn't know clean energy. Witten in Princeton doesn't know clean energy. Witten is our modern day Einstein at the moment. Susskind in California. We can go around the world. I can throw all these physicists' names out. You just just look up any of their work. They're gonna, if you get in a chat room with them, you're gonna say, "Is that clean energy?" They're gonna be like, they'll choke a little bit. I'll get back to you on that. Clean energy. Where do they come up with these things? I guess that's like an Al Gore expression or something like that, or John Kerry or Jim Carrey, the comedian thing. Clean energy. That's so funny. Oh my God, clean energy. All right. Anyway, that's what that is. Maybe copper is a clean energy. That's what it is. So all those bulldozers and all those machines digging it out of the ground and so forth are clean. All that fuel to fill the machines is clean. Does that mean you can drink it? Is that what they're talking about? Maybe clean energy. You could drink that energy. Maybe it's like an energy drink. Maybe that's what they're talking about. I don't know. All right, so that's where we are with the metals complex. So we did the energies complex, we did the metals complex, and we all are weighted with, let's go back to silver. We're all weighted with bated breath, waiting for this thing to go do something. Like, give us a signal. Stop going sideways. Give us a signal. And there's headlines everywhere with the silver. I mean, everywhere. This thing's going to rip. One of them said something about ripping people's faces off. Oh, my God. All right. So that's that. So I guess what we could do is we could go take a look at, unless someone wants to see something or, get an explanation on something, I'm going to jump over to the stock indices. Let's see what the stock indices are doing today. I know that I was mentioning them from the very, very beginning. And there it is there. You can see daily buy and weekly buy. And I tried to go into the sell there last week and didn't work. And you can see they're in buys, buy. And let's do a refresh on that before we do that. Let's go like that and cancel. And let's just do the refresh. Control R. There it is. And so that's moving up again today. I imagine all of them are doing that thing they do. And so that is the Tech 100 on Dukascopy. Let me just show you that right there. Tech 100. That's the creme of the creme. That's the number one stock indice on the number one stock exchange. I guess you could say it that way. No, let's cancel that. Oh yeah, okay, we'll do this. We're saving it. That's right. Where is it? Oh, there it is, right there. And so that's what that is. The New York Stock Exchange does about 1 billion shares a day. And the NASDAQ exchange does something like 7 billion shares a day. So it's 7-1 now. So it's kind of taken over it's taken over the position of the old New York Stock Exchange, where it was like 70% of the marketplace. Now the NASDAQ is 70% of the marketplace. It's kind of funny how they flip-flopped. And the Dow Jones Industrial Average, which we can go take a look at right now, also has 6 NASDAQ stocks in it, which again, and remember, the Dow Jones Industrial Average was a marketing tool for the New York Stock Exchange for over a century. In other words, it was all New York Stock Exchange stocks. And so, and look at that. There was Friday. And so that wasn't a daily sell, but in a weekly buy. So now we can put that right there. It's trying to go into the buy there. But the Dow Jones Industrial Average was a marketing tool, and the Dow Jones Transportation Index was a marketing tool, and the utilities were. It got, it gave like a sport, gave people a chance to follow the indice, and then they could invest in the indice by buying those stocks. And so for a long time, that was the process. Now the Dow Jones Industrial Average has NASDAQ stocks in it with New York Stock Exchange stocks. So obviously, those days are gone. It's not necessarily a marketing tool for the New York. Matter of fact, they're talking about moving the New York Stock Exchange down to Florida now and getting away from the crazy taxes in New York State. So that's the next shoe to drop, I guess you could say. And then the S&P 500 is an accumulation. That closed on Friday in a buy. Right? Let's fix that there. There we go. And so I think it was on the fact check spreadsheet too. You can see that both of them are in ones. See that line 27 right here, line 27 and 26 in buys. Now what in blazes is that doing there? Get rid of that. There we are. Fat finger. So there's the daily buys. And then Bitcoin, we usually look at Bitcoin as like a stock indice on some level. It's kind of like the stock. It's like the way the Dow Jones Industrial Average was for the New York Stock Exchange for over a century. Now the Bitcoin is for cryptocurrencies in general. People lean at that. Oh, look at that today too. We can do this. We're going to throw that right in there, like move that over one too, because it's a red and a green. Unless it's not. Let's see what this does. There we go. Yeah, it's a red and a green. So let's move that over to there. So if it closes like this, the Russell 2000, which is the Russell's kind of taken the old position of the Nasdaq. So it's kind of funny. The Nasdaq has taken the position of the old New York Stock Exchange. The New York Stock Exchange has taken the position of the Nasdaq on some level, I guess you could say. Or I guess it's still it's not. It's just a minor to the old New York Stock Exchange. And then the Russell 2000 is the real Nasdaq of now. You know, of this era. I guess that's the best way to describe it. So the Russell, you know, they're low cap stocks. One in 1,000 is going to be a major success. The others are going to be okay. You know, you have, I think things like you know, GameStop got pushed into it, and what other is in there? Like BlackBerry's in there now, and you know, all these companies that were really flying high and going somewhere have kind of chilled and fallen into it. And that's why it's been showing strength, is that I think the hedge funds were buying the index and selling those stocks short as an offset. No, that wasn't too good a deal. Obviously, that wasn't really a hedge. But, you know, it put a panic into the markets with the Robinhood and the Reddit stuff that we talked about earlier about. So, and that is what that is. There's the stock indices. And so what we see here is that action is going on. Now, over in the currencies, what is really the pillar to currencies in general is the old stats, you know, CPI, PPI, inflation, employment, you know, all the old economic fundamentals that people watched used to govern the currencies. But those things have kind of drifted, and you can see here the 10-year is heading down, which means that the interest rates are rising. We're seeing some increase in interest rates. Matter of fact, I guess the 30-year might be even 2% at this point. It's hard to say. Yeah, but this is the 10-year. You can see we've been in a daily sell for a couple of days and a weekly sell for a few weeks here. So again, there's that winner, winner, chicken dinner. Let's see. Where are we at? So that's the 10-year right there. Right next to it, as you can see, is the 30-year. So let's take a look at the 30-year. Oh, you know what we didn't do is we didn't look at Bitcoin either. Let's finish off the 30-year. Now that yield there could be as much as 2% now on a 30-year U.S. bond, which is a pretty good return when you think that 18 trillion of invested assets right now are in minus territory. In other words, they weren't bought plus and then gone minus. They were bought minus and are still losing money. They lost money the moment they put that position on. That's quantitative easing. That's what that's all about. That's the QE. They come out and they buy all these things up and then force people to buy product to guarantee that they get their money back. That's what the quantitative easing is basically. That's what that's all about. So funds and hedge funds and banks and so forth have billions and billions of dollars, but the insurance corporation only insures $250,000. So you have like $1 billion. You're a billionaire. Where do you put your money that's guaranteed to give you get your money back? Well, obviously, if you open up a bank account with $248,000 or $249,000 across the whole banking universe, you have to do that, you know, how many millions of times? I don't think there's millions of banks out there. So, you know, you have to, you know, to insure yourself, you go and buy government bonds. Well, they've made the government bonds pretty much almost zero interest rates, and especially in the European Union and a lot of places, they're minus. We talked about this last week. Interest rates are now drifting up drifting down in the junk bond market. So the worst of investment bonds are being bought up because there's nowhere else to go, and they need to get some type of return. All right, so let's do a control R here. This is not doing the best when it comes to adding data to it. I'm confused on that. But anyway, it's in a buy, and the daily is sideways here. It was in a sell coming in this morning, and you can see it's perked its head up, and it's pretty much unchanged. This is Bitcoin. Oh, I meant to go look at that other futures contract. I will try that today, since there's no market today after the webinar. and we'll see if we can find Urethra, Ethereum, something like that. I don't know, one of these E type of things, and it's about $1,700 a coin. I guess if that's how you phrase it. And so that's the next product to start paying attention to. Maybe the better product over Bitcoin. It's hard to say. Maybe my math will read that. I'm not sure why this particular charting program all of a sudden won't show us much data on it. We're going to have to go find out why that is. It's doing the daily with no problem, but it won't do it with the weekly. Look at it. We're looking at what is it? We have a picture of the January contract which has disappeared now. See, that filled in, but even then that was having problems too. And the buy was way back in there in the weekly. Then it slipped into a sell for a week and then went back into the buy again. Somewhere's around, I'm not sure where, probably into the sell in here somewhere. But end result is it's where is it now? It's in a weekly buy again for 3 weeks. It hasn't exactly done anything fantastic, that's for sure. All right, where are we now, traders? I guess we're at the end of the road, aren't we? So if there's any questions, we got time. If not, we will skedaddle and call it a webinar. And then tomorrow, all the markets will be open. The U.S. markets and the European markets and so forth. You can see they're not updating the grains. That's corn. What is that? There you go. Corn they're not doing anything. I don't think they're trading them. So there's no real trading in these things. Anyway, happy trails to you until we meet again, which will be Tuesday. It's a 4-day week here in the States. Happy trails to you, to all our trading friends. Ta-ta for now. Doc, over and out.